Very good evening and welcome to yet another series under Get More from Mallapuram, wherein the purpose is only to give clarity such that people will have confidence in whatever the insurance policies which they have purchased or planning to purchase. Okay, so this is the reason why we have actually started this webinar series. And even before we get into today's topic of the webinar, let us actually look into the real reason why we have been there into this particular webinar series. It is to provide the clarity for confidence, and the reason here is even whatever that we discuss, it is not intended to either promote a particular company, an insurance company, or to promote a particular product of an insurance company. We are not going to do that in this webinar series. And at the same time, whatever the discussions that we do here, it is not intended to criticize any particular product or a person of any insurance company. Okay, and whatever that we discuss here, it's all personal opinions and it can't be taken in as an evidence under any court of law. So with these declarations, we would love to get into today's topic. And today's topic of the day, it is MSME fire insurance, specifically because there is a new standard MSME fire insurance product which has been released by IRDA, right? And all insurance companies are supposed to give this particular product with effective from 1st of April 2021. Okay, and so in this particular insurance, in what conditions the claims are not payable? So what are the non-payable claims under the standard MSME fire insurance product? So this is the topic of the day, and let's actually come back to this webinar. So the agenda is going to be like this. We are going to discuss about the situation, and then we are going to discuss about the clarity for confidence. This is the main section wherein we'll be discussing on what are the factors or what are the situations in which the claims are not payable. Okay, claims are not payable, and then we are going to conclude with the help of the review, and then we'll come with the action points which need to be taken up. Okay, so by the end of this complete webinar, whoever is the business owner or the person who is recommending the insurance policies for their company, or even the bank managers who are actually watching this particular video, right, they will have an absolute clear-cut clarity on how they need to have the inbuilt benefits and in what conditions the claims are not payable. They will have very clear-cut clarity on it, and because of which they can avoid falling into pitfalls wherein the policy will not be covering the required events which need to be covered under the policy. Right? With this, let's start. Okay. So the situation analysis. Situation how does it happen? Like when we actually get down to a situation wherein the claim comes up. When the claim comes up, what are the things which are going to happen? The things which are going to happen are like this. Okay, so there's a huge fire which has actually occurred in the premises of the organization, right? And then there's a claim. So the first thing what we are supposed to do is we need to intimate the claim to the insurance company. This is the first step. Okay, so what all that is going to happen? So we intimate claim to the insurance company. Insurance company is going to register the claim. They're going to give you the claim number, and they're going to appoint a surveyor for the claim assessment. So what the surveyor is going to do? He's going to come to our location. He'll look into what exactly happened in the event, and then he will collect all the documents. He will take all the photographs. He will also collect the evidences on what is a proximate cause. Why exactly the incident has actually happened, whether it is lightning, whether it is a fire, whether it is a flood or inundation of water which has come into the premises. So what is the event which happened? What is the proximate cause for that? And how did you took the policy? Okay, so he's going to collect even the policy copy, and what are the details which you have submitted to the insurance company while you are purchasing the policy. So generally the details, if you actually look at the details, what normally we should give to the insurance company while booking our fire insurance policy are your complete list of assets, then the asset values, and how did you arrive at that particular value, that is whether it is a restatement value or the current market price value. Current market price value is only taken in for the stocks, but for rest of the other things it is only the reinstatement value which we need to consider, because we can't replace a 10-year-old machinery with a 10-year-old machinery once again. We will be replacing it with the new policy, new machinery. Okay, so when you're replacing it with the new machinery, then we need to cover all the assets not on the market value basis but on the reinstatement basis. So what happens when then the insurance surveyor, he will collect all the details, and then he'll go back to the insurance company. He will prepare his own report to the insurance company. Everything looks okay till this point in time. But what happens next? Suddenly, you got to know that your claim is denied. Okay, how do you feel? How do you feel as business owner? Absolutely terrible. You will have huge amount of anger on whoever is the policy, who the person who has actually helped you out, right? And then absolutely to complete distress, right? Then you will also call up that intermediary or the person or the banker who has actually given you the policy and say, what kind of policy have you actually given us? See, these guys have actually denied the claim. We have been paying you the premium, and even after paying the premium for almost 10 years till now or 15 years till now, the first claim they said we are rejecting, right? Things can happen like this, okay? And we'll be very angry, right? And why do you think all these things happen? Because all these years when you're actually been paying the premiums, you're actually not sure, what are the coverages are there, what are the conditions in which only the claims are payable, and what are the conditions in which claims are not payable. Do you know those details? Right? Most of the situations we really don't know in what conditions the claims are payable and in what conditions claims are not payable. So how do you know that? You need to analyze your existing policies. Okay, now let's get down to the next section, that is the real section wherein we'll be discussing the clarity for confidence. The reason is you need to have enough of clarity on all those conditions in which the claims are payable and in which the claims are not payable. Okay, let's go one by one. Are you with me? If you're with me, just type in yes in the chat box. Oh, yes, thank you. I thank all the people who have been consistently watching our webinars live and at the same time participating in the webinars. This is actually most important thing, because of you good people who are there on this webinar, we have been consistently doing it. Almost this is the 17th episode we are doing on every second and fourth Saturday of every month. And thanks a lot for all the kind of support which you people have given me till for us and get more from Mallapuram, right? Great, thank you. And let's get into this. Okay, so the claim is denied. How, in what conditions, in what situations the claims are denied? The first condition, the claim is denied because the declaration of your occupation is wrong. The claim is denied because the declaration of wrong occupancy of your business on the policy copy. How do you know that? That's why you need to review your policy. It's not just getting the quotation from the insurance company and just paying the premium. You need to check whether it is the right business description, right business occupancy is mentioned on the policy. If it is not mentioned, then whatever the premium that you would have actually given, the claim is not payable. It is non-payable claim. Okay, let us see a few scenarios. Okay, right? So the few scenarios are the wrong occupancy are, let's take there's a commercial area, commercial place which is there, and it is being owned by the owner, and the owner is actually taking the policy probably before the same asset has been used for a office space. So he's still renewing the same policy probably since 10 years or 15 years back. Since then he's continuously renewing the policy. And but this time this person has actually given the same premises for a printing press. Okay, is this the printing press same occupancy just like your office space? What do you say? No, right? No. Okay. Printing press will always will be using some ink, some ink which is wherein some alcohol or some fire related means, because the paints can actually get the fire, they can catch the fire very easily because of the alcoholic nature. And moreover, to clean the press, to clean the printing machinery, they will be using alcohol to actually completely clean the entire machinery on a regular maintenance basis. So because of these reasons, if the same occupancy, earlier probably given it for an office space, now it is given for a printing business. So the occupancy got changed, the premium will be changed. If the premium is changed and you are still paying the old premium, then the risk is void ab initio. That means the contract is not covering the risk which is really there, and because of the wrong occupancy which is given, that if there is any claim, then in this particular premises it is not payable. Okay, so what is going to be the result? The impact is the claim is not payable. Right, let's look into another situation. Okay, so there is an fabrication unit in an industrial area, right? In that fabrication unit, we have actually seen a regular fabrication work going on, but now because the owner has become real old and he wants to let it out on rent on a lease basis. So what he did, he actually gave it to another manufacturing unit wherein they will be manufacturing the corrugated boxes, which is used for the packing of different materials, right? So the corrugated boxes which is actually being manufactured in a fabrication unit which was earlier. Okay, do you think both are of same risk? No, right? Fabrication unit has actually got a very less risk when compared to the corrugation box unit. Why? Corrugation box, there's a lot of paper which is used, and there's a lot of other materials which are used wherein an alcohol base is the basis of their complete manufacturing. If that is the situation, then what happens? The fire can actually come up very easily in wherein the corrugated boxes are getting manufactured, because of which the risk is different. The risk is different. The premium is going to increase. Probably if the occupancy is mentioned correctly and the additional premium is being paid, only then the risk is covered under this particular situation. But otherwise, the risk is, if there is any claim which comes up, the claim is not payable. You understood? So the first situation is a wrong declaration of occupancy. If that happens within your policy, whatever might be the premium that you've been paying, and also might be from different timelines, like probably from a very long time that you have been paying the premium, even then the claim is not payable. Got it? Okay, now let's look into the next reason. The next reason is claim is denied, okay, because of suppression of complete information. I've seen most of the situations when we actually go out to the small and medium enterprises wherein the business owner is really busy because he is the one who's actually running the entire show of the business, right? So he normally delivers it to his accounts person to actually give all the details to the insurance company to get the policy done. Or sometimes what happens, the banker is after the owner to give the additional OD facility or a loan, a working capital loan for the business, right? So he's after him, and he just wanted to say, like, no, okay, you want 2 crores of loan, so probably 5 crore of loan. So you need to give me, and you have to take a policy of at least 5 crores. So what the business owner will say? He says, okay, fine, just do that policy, but get me the loan. Okay, this is how in it is not a real suppression of information which now actually happens, but it is they don't know what is the exact information to be given, and banker assumes it in a different way, and the business owners, they don't know what to be given, and they just do the policy. They just do the policy for the sake of doing. But if any claim happens, that's when we understand that the claim is not payable because you have not given the right information to the insurance company. Okay, how does this that is going to impact? That is all going to impact because you have insurance company will feel that you have actually suppressed the complete information. So suppression of information happens in two different situations. One is while taking the policy, second when there is a claim. Let us look into two scenarios. Okay, in the first scenario, the probably you have not given enough of details about fire safety. Fire safety is being taken, it's very light. Probably even the information is asked, the accountant who is out there, he would have said, no sir, ఏదో ఒకటి రాసేయండి. You just write anything whatever you want there. Okay, just give me the policy first. Okay, so probably they would have mentioned it or they would have not mentioned it. Okay. Next, type of storage materials. Like, what is the kind of materials which are there? There might be a small alcoholic content or a chemical which can catch fire on its own, or in self-combustible material which is out there in the storage material, right? Probably it is very small amount which is stored there, but that can actually cause the fire in the stored room. Okay, so whenever we actually take those particular risks to the insurance company will identify the maximum risk and it will price the entire premium accordingly. If you don't give that information, and tomorrow if the claim happens because of that particular material which you have not declared with the insurance company, then the claim is not payable. Okay, so you have to give the entire information and the complete details of even the process. Is there any boiler which is involved which actually generates steam, which is used as a process of heating of the entire process, or steam as a part of the process where it is used in the manufacturing process for giving the end product, right? And how is this steam generated? Is it a diesel based boiler which you have, or a coal based boiler which you have? What is the kind of boiler which you have? Okay, have you given those details to the insurance company? If you have not given, and the boiler is existing in the entire process within the premises of the manufacturing unit, then the claim is not payable because you have not declared it with the insurance company. And when the surveyor comes, when there's a claim and you are seen because of something happening within the boiler area, and the fire has come up and it has caught into the entire manufacturing unit, then, and you have not declared it with the insurance company, then the claim is not payable because the proximate cause is different. So we need to declare all these details with the insurance company well before taking the policy. I hope this is making it very clear for all the people who are out there, and how does this minute information plays a vital role in the claim settlement, right? And if this is not given correctly, the impact is claim is denied. And when there is an claim which happens, we need to give the entire information completely. Never ever withheld any information when there's a claim which happens. Okay, so give the complete information, don't suppress the facts, right? And mismatch of the facts and the details which is given. Sometimes, like within the policy, it is given that your entire policy, your entire value of your manufacturing unit is say 50 crores, and but within the policy it is mentioned as only 10 crores. Now, how is this mismatch? Can that be a huge difference like that? because the banker has actually taken the policy, and for banker has given the loan amount for only 10 crores, so he has done the policy for only 10 crores. Do you think claim will be paid? And how did he arrive at that 10 crores? He has only covered the stock, but not the entire machinery. Now the fire has actually happened in the boiling area, and it has got into the processing area, and the entire manufacturing machinery got into the fire. But what banker has done? He has only done it for the 10 crores of loan, and which is given only for the stock as a working process loan. Then what happened? He has covered only the stock. With the stock area, there is no damage happened in an incident wherein all other part of the manufacturing unit got onto the fire. Do you think the claim is payable? Claim is not payable. Okay, and then if there is an explosion within the boiling area or where in the process where the steam which is used in the entire process area, and there is an explosion which happened within that boiler or within that the steam process which is being used, the vessels, right, or the economizers, right, then the claim is not payable because the explosion or implosion which happened because of the centrifugal forces which is also being used is a part of the process, and it is not been mentioned with the insurance company. You have suppressed the fact while you're taking the policy. Do you think it is being given? No. The claim will be rejected. It is denial of claim. Okay, so in these situations also the claim is denied. Okay, so you need to look into all these things when you're actually booking the policy or taking the policy, and you have to give all these details so that the insurance company can underwrite it properly and price it properly. Okay, now let's look at another situation wherein the claim is denied. Okay, here it is a proximate cause. The proximate cause because of which the accident happened is not covered under the policy. What are the situations which can happen because of the proximate cause where it is not covered under the policy? Let's look at that. Okay, so the proximate cause which is like this, like the normal cracking of the building, or there is a settlement or bedding down of new structures which have been constructed, okay, on the land, right? So there's probably the compression or the of the land is not done properly, because of which whatever the construction which has been done on the bed, okay, there is a depression, there is an settlement which happened, because of which the cracks have come into the building, or the building itself has actually fallen, or the manufacturing unit has actually fallen. If such kind of things happen, no. Why? The proximate cause of cracking of the building or the manufacturing unit is not because of any ill design in the product, in the construction, but because the land has actually settled down. It has gone down. Okay, if such things happen, do you think the claim is payable? No, it is not payable. The proximate cause doesn't get covered under the policy. Okay, or even there is a settlement or movement of the made up ground, because there might be some ups and downs on the ground, so you have actually made it up, you may leveled it, but you have not no made enough of effort in pressing that particular land and making it perfect bed for construction. If such thing happened, and then there's a settlement or movement of that particular land which is out there underneath your construction, if that happens, the entire building will fall. That happens, do you think the claim is payable? No, the claim is not payable under this situation. Now, you can also see there's a coastal, if your manufacturing unit is near to a water body or to a river, or wherein there is an erosion happening onto the land. If there is any erosion which happens because of these conditions, unless flood or inundation is also covered, it is not payable. The claim is not payable under the policy. Okay? Because you have actually gone near to the bank of the river and the erosion is consistently happening, and you know that there is an evidence of the erosion which can happen, So there's a certain about the risk which can happen. It's not payable under any insurance policy, any fire insurance policy, right? Now, there might be even a defective in the construction of the entire building, or even the workmanship or the material which has been used for the construction of your factory. You think the claim is payable if the proximate cause is being able to be now traced back into the defective construction or the workmanship or the material used? The claim is not payable. I'm okay. I'm actually saying it in the chat box where you're actually making it so clear, so clear under like what are the ways how the claims are not payable. Yes, Mr. Sujit. Yes, we want to make it so much of clarity. We want to bring so much of clarity to the people such that you will have confidence on in what way we need to cover the risk, in what way we need to give all the information to the insurance company. After giving the information to the insurance company, even if they say no, that is still okay. At least you're not wasting your premium, isn't it? Let the insurance company decide whether they want to underwrite your risk or not. But it is our duty and diligence to give the entire information to the insurance company and let them decide whether they want to give it or not. If they say yes and they come up with a proper pricing, it's good. At least we have the right coverage in place. But otherwise, we just manipulate and don't give the enough of information, still get a policy. It means only one thing: we are just wasting our premium because the coverage itself is not there, because we have not given the right information to the insurance company. I hope this gives you a lot of clarity, so that you will have confidence. And that's the very reason why we have started off this webinar series, that is Get More from Mallapuram, wherein we want to provide clarity such that you will have confidence on whatever the policies which you already have or planning to purchase. Okay, have any problems or any doubts, there's a number out here. It's 7569 645 645. Just give a missed call. Me and my team will be all out there to help you out. Okay, let's get into presentation. So the proximate causes, we are actually looking into that. So there is a demolition or a construction or a structural alterations which you are actually doing it for your building or for your manufacturing setup, and there's a claim because of that reason it has actually happened. Or there is no work which is happening out there because of some riots which has happened, or some kind of standstill condition which has happened because of the lockdown kind of conditions, right? And then a fire accident has actually happened. No, the claim is not payable if it is beyond 30 days. Okay, if it is beyond 30 days, it is not payable. Even the stocks, when they actually put out, okay, when even if there is a non-operation of the business, it's not payable. Known defects which is known to the owner of the company, it's not payable. Leakage of tanks, and also even from the automatic sprinkling systems which is out there as a fire safety measure. Okay, if there is a leakage, normal leakage is covered, but the leakage happens because you are doing a repairing work or an extension work of the sprinkler system, okay, or a removal of the sprinkler system. If that work is happening and there's water which has come and there's inundation of water which has happened, there's a lot of damage which has actually happened, do you think the claim is payable? No, it is not payable. It is not payable. Okay, and then there's a pollution which happened, right? And that pollution, there's a claim because of pollution which has actually happened. Do you think it's payable? No, it's not payable, right? I hope this gives a lot of clarity for everyone. Okay, so these are the situations wherein the proximate cause, if it is because of the pollution, if it is because of the contamination, because the leakage is because of the work, the removal, the alteration, the repairing work which has been carried out, okay, Those kind of situations, claims are not payable, but otherwise it is payable. Okay, there's fire accident which happened because of which pollution has actually happened, then it is payable. But there's a fire accident because of the pollution happened, no, not payable. Okay, I hope there is some clarity which is given. Okay, and now there's another situation. Claim is denied. Claim is denied because the restatement is not done. That means the repairing is not done even after 12 months. So there's a fire accident which happened, right? And then you're supposed to repair that or reinstate that or get some new machinery or construct a new building. But all these things should happen within a reasonable time limit. But if it goes beyond 12 months, that means what? You're not interested. If you are not interested in safeguarding or getting back your asset on a working condition, then how do you expect that insurance company will be interested in covering that risk? Okay, this is something which most of the business owners, they don't know. Fire accident happened, within the reasonable time that should be repaired or reinstated or get the new machinery, it should happen. If it's not happening beyond 12 months, the claim is withdrawn and it is never ever be paid again. Okay, right? Okay, now there's another situation, and this is something which is really fantastic, and people should know very clearly about this. Okay, that is, claim is denied because the damaged assets are not covered under the policy. How pathetic it could be. You have a policy, you're paying the premiums, but the damage occurred in an area of your office, in an area of your manufacturing setup, but that asset is not being declared under your policy. Of course, the MSME standard product, which has been given by IRDA, it covers an extension of up to escalation of up to 15%. But if that asset is more than 15%, do you think the claim is payable? And that detail is not given to the insurance company. See, normally what happens whenever we run the business, there might be some new machinery which we are purchasing, or new line of production cycle which we are constructing or extending it up, or it is coming into the production line, the new setup what you have done. All these details need to be given and endorsed into the policy which you already have. If you have not endorsed, if you have not given the details to the insurance company, do you think the insurance company will be knowing all these facts and will be covering the risk? No. The insurance company will never know these details, and because they never know and it is not given or not endorsed into the policy, and there's a fire accident which happens to that new asset, the claim is not payable. And this we have seen in most of those organizations wherein they take the policies through bank, the insurance policies through bank, and bank only covers that assets wherein they have given the loan. And then they'll be under false impression that the entire manufacturing setup is being covered under the policy which is being taken by the bank. Please, what I suggest, please just have a review of your insurance policies. Just don't depend on the banker. Banker is interested in the loan what he has given to you, how he can recover it back. He is not interested in the entire asset of your organization. If you miss out in declaring in declaring those assets under the policy, and the damage happens, but the assets are not covered under the policy, the claim is not payable. The very reason of taking the insurance is gone for toss. So please check. So what we recommend that at least you review your policy. How you can do that? Don't get worried. Just take a photo of this or whatever that the QR code that you are seeing over here, or you also have the link which is actually being mentioned out there. Okay, Or you can also do one thing. You can dial up this number. It is 7564 645 645. You just give a missed call on this number. We will be all out there to help you out in reviewing your existing policy. You might have taken it through the banker. That is still okay. At least review your policy, look through what are the coverages that you have, look through what are the things in which, or what are the conditions in which only the claim is payable, and in what conditions the claims are not payable. You should know that. Just review your policy. Okay, I hope this gives you a lot of clarity, such that you have confidence on what are the policies that you already have, or what are the policies that you're planning to purchase. We are always there. We are with you. Okay, and so we are coming to the conclusion. So conclusion is protect your business. Okay, you have to protect your business. And how you can do that? Business owner has got lot of things to be done. So what are the action points, such that you will always be in a very secured place, and you will have enough of confidence that even if something were to happen, there is your insurance policy which will cover you entirely, yourself and your business. Okay, how? First thing, review. Check the policy benefits under your existing policy. Get your agent or your intermediary or the banker to review your policy entirely, whether it is covering the entire risk or not. Okay, and discuss with your safety manager whether you have all the fire safety measures, fire detection system, fire extinguishers, or kind of fire detective fire protection measures, like there's some water based, some oil based, some powder based, right? Okay, and do you have your sprinkler system in place? Do you check that? Are the nozzles are all working properly? The detection system, is it working properly? So do you do those drills or the safety audit on a consistent basis? Does your employees know how to use a fire extinguisher? Do you do those drills? Do they know what is the action points to be done when they say when there's a fire under the factory, right? So all these things you need to discuss. You need to review these things with your safety manager at least once in every quarter, right? And then if there is any changes which are there in your conditions of your operations or of your business or of your occupation change, discuss those things and get all those things endorsed under your existing corporate fire policy under your MSME. Okay, whether it is MSME or even in your other companies also, are the same action points which you have to do on a consistent basis, right? If that is happening, it's fine. Otherwise, you need any help or any support, me and my team, we are always there. You can just take the scan of this QR code, or you can copy this link. We'll be also pasting it in the chat box. You can just click on this link and submit all your details, or you can also even dial up this number, that is 7569 645 645. Me and my team, we are always there to help you out. Okay, right? And with this, we are actually coming to the end of this 17th episode, the webinar series, Get More from Mallapuram, that is MSME fire insurance. How or what are the situations in which the claims are not payable? Okay, and with that, thank you. Thanks a lot for joining this webinar series, and keep coming back. We are coming up with very new situations, very new things from every week. That is in this webinar series of Get More from Mallapuram. Thank you. Come again back on every second Saturday and fourth Saturday. Thank you.